Hi everyone, so today we'll do a stock analysis on GeoPark Limited, ticker GPRK, and it's an oil and natural gas exploration and production company. So if you want to contact me, you got like Discord, X, and email. So if you have any question or just want to chat, just go to these places. Quick disclaimer, I'm not a financial advisor. This is my own research, up to you to make your own decision. So let's start with a summary. So we'll talk about the company profile, with description, the assets of the mines, unit cost, the reserve of the mine, the attempt to recently acquire GeoPark, the insider ownership. Then we go with the fundamental analysis with its stats and look at the 4 years of fundamental through graphs. Then we look at technical analysis on the daily and monthly, look at the price catalyst, which is oil, and then end up with a conclusion. So let's talk about the GeoPark Limited. So it's oil and natural gas exploration and production company that has operation with interest in Chile, Colombia, Brazil, Argentina, Ecuador. They recently divested from the Chilean operation in January 2024. So they're pretty much one of the leaders in energy in Latin America that are I think private, because there's a lot of government kind of oil and gas companies. Then they started in Colombia in 2012 and then bought some asset in Brazil in 2013. Then added some in Ecuador in 2019, and then finally Argentina in 2024. So I think Argentina is the new big asset they acquired. I'm going to talk about it later, but just to give you a summary of the company briefly. And then GeoPark was founded in 2002, and its base is Bogotá, Colombia. So let's talk about the assets now. As we said previously, there were assets in Colombia, Ecuador, Brazil, and Argentina. So then they mention a little paragraph why they invest in Latin America, that they believe that they are unexplored and undeveloped land that could be potentially extracting oil and gas, and that's why they focus on that, and they believe they can increase their production a lot in some of the land they have or acquired recently. So that's about it for a summary. So let's talk about more specifically about the Colombian assets. So as you can see, they are in the center of Colombia and then in the border, I think, with Ecuador, but still in Colombia obviously. And then the big numbers in there are pretty much 31,400 barrels of oil per day, 84.8 million barrels or equivalent. So I put what they mean here because it's hard to remember. And then they have 3.2, I'm guessing, millions of square meter. So it's pretty much most of the production is in Colombia. I will show you the number later, but that's what I've discovered. So it's pretty much a Colombian oil and gas company mainly at the moment, with maybe a potential to add with a big Argentinian asset, but yeah, I'll show you later. So I will be brief with Brazil and Ecuador because I thought the production was very small. But I just quickly give the numbers. So they are mainly in Brazil on the east coast. They have assets there, and then their barrels of oil per day is 222, and then 1.1 million barrels of oil equivalent in reserve. So it's very small compared to Colombia, as you could see, and then only 61,000 square meter. Oh, acres, sorry, that's where I was wrong. So it was acres before 2 million, but you can see it's a huge difference. Then Ecuador is the same, it's a bit bigger, 1,749 barrels of oil per day and 1.6 millions of barrel equivalent in reserve, and kind of small land too. So now let's talk about Argentina, because this is where most of the future growth come from, I believe. So first of all, they acquired this asset in 2024, and it's in, I think, in center more or less of Argentina, as you can see here. And I think they have big believe in that one, the potential. So they have acquired 2 blocks with so they saying they acquire another 12,300 acres, and so 25 million barrels per reserve, and then a potential of 20,000 barrels of oil per day. So it shows that it's kind of getting to almost at the same point as Colombia, or I would say a bit more important. So yeah, so the land is called Vaca Muerta, and apparently there's huge potential in this area that some others discovered before. I don't know too much about it. I don't want to go in detail, but just explain briefly so it makes sense. Then the interesting thing that I wanted to share was the long-term value. So they believe they can grow the production from this year around 2,000 barrels per oil to 20,000 in 2028. So those numbers were 2028. Just want to say it's not today. And then the potential profit from it. But I mean, it's speculation, to be honest, at the moment, because we don't know. But this is the big project that could potentially increase a lot their production. And I just wanted to add the news. You can actually stop here if you want to read, but the news that said that they acquired recently the Argentina assets, and they explained a bit how it all, the 4 blocks they acquired, and the percentage interest and all that. So if you, and how much it cost them, so that could, if that interests you, you can have a look. So in these slides, I wanted to show you guys 2 things. So first of all, that do they sell crude oil or gas? And then after, in which country do they actually extract most of it and they are profitable? So it's pretty much mainly crude oil. So it's the majority, as you can see, 650 million, and then gas, which is only, I think, 5 million. So as you can see, it's pretty much oil. And then the second part, as you can see, Colombia is pretty much where all the sales come from. There's Ecuador as well, you can say, and others, but they're very little. So this represent maybe 5%, 10% of it. It's mainly Colombia. And then if you look at the profit, because I think this is the most important, you can clearly see that it's only Colombia, because everything else, they seems to be losing money in a way. So it's pretty much a Colombian assets selling only, producing only oil. So I hope I read that right, because I thought that was actually not that high. So the production cost on their barrel is around 16.3. So I thought that was actually very low, but here's the proof that I got that number somewhere, which is here. And yeah, that's what I understand. So production cost, and average unit cost per barrel. So it seems to be relevant. So yeah, that seems to be quite low, and it's lower than the year before. So yeah, it seems to be pretty low. That's good. So now let's talk about the reserve. So I used their 2024 annual report to figure it out, and then I actually didn't use all of them, but it's pretty much the same. I use 56. I'm trying to be conservative, and then I haven't even added the Argentina one. But the Argentina one is more of a they just acquired it. I'm not sure if they don't add it in the same. So I just wanted to focus on just what they have today, and then what they will have very soon. So yeah, they have 56 million barrel, very conservative. You could add more, And then like so 1 barrel, just I didn't know, but it's actually 158 liters of oil. And then like in here I did a small calculation, taking the $60 current price of oil with the 56 million barrels, and we get 3.3 billion. So as you can see, this is sales, right? So that means the equivalent of around 10 times the market cap, because I saw the market cap is 330 million. And then compared to the cost, because like I'm surprised how low the cost of production is, but it makes it really close and profitable. So we get like reducing 16.3 from the 60 of the cost, I mean the current price of oil, that you get 43. So 43 is in profit times the 56 million, so you get 2.4 billion. So we still have 7 times profit of the market cap in a way. And that doesn't include Argentina, that doesn't include what they can find the near future. So I think it's fairly good. But especially what is great is if they can keep really low price like this at 16.3 cost of production, and then the price of oil goes to 200, which could happen. I mean, obviously we don't know, but it could. That would literally like make this company really, really profitable. I think it could easily do like a 5 or 10x if it was in a good scenario. So at the moment, price of oil is low, so obviously it won't happen. But the day if it ever happened, the price of oil start rising, which I think it will, but who knows, then I really believe that this company has quite potential to do a multi-bagger. This is a quick side because I know very little of it, but just I thought it was interesting that they were as well hedging like some other companies that I've seen, and they have 0 premium colors and 0 premiums 3-way, so it's some sort of like options, kind of option with multiple contracts. But yeah, just wanted to show you guys that it kind of helped them to survive in case the price stay lower, I guess. I don't really know because the price is quite low, if I got that right. So yeah, anyway, it's still interesting to see that they're still hedging. So I haven't really seen much like transaction recently, like insider trading, but I have seen the shareholders, and I think they're pretty good. So there is mainly one shareholder, which is James E. Park, that has like 17% of the company. So I'm not sure who that guy is. I believe it's the CEO. But yeah, so that's a huge percentage. I think I really like to see that. And then in the others too, which are the same pretty much, they show all the biggest shareholder, and then that guy is first by far with 17%. And then there's Renaissance Technology. So this is a very famous hedge fund that was created by a mathematician for this name, that has 6%. So I like to see when they have something, because they tend to actually invest in smaller companies that have huge potential reward. So when I see these guys in there, it's always a little bonus, but nothing more than that. So yeah, I really like that they have like lots of share insider ownership, which is very positive. So this is very quick, brief. Something recently happened. So I was actually looking at it, was trying to make a video about GeoPark, and then like it literally just shoot up, and I was like, why did that happen? It was really strange, because I started looking at it to make that video, and then apparently like some like companies, Parex Resources was they acquired 12% of the GeoPark company, but they wanted to acquire the whole company, if I understand that right. But then it kind of got rejected, so they were looking at $9 a share. It's currently at 8 point something. So, and yeah, I'm a bit surprised with this story. It's a bit unusual, but that's what happened recently, and it should up a bit higher. So I'll tell later, but I'm expecting to wait for a little pullback and see it cool down, maybe to add more if I'm interested. So now let's look at the fundamentals. So we have a market cap of 330 million, like I said previously. We have a P of 7 and a forward P of 2. I mean, like, these are nuts numbers, to be honest, especially on the really low oil price. I mean, if it was like much higher, I cannot even imagine the valuations. Then we have a 0.6 price to sales, a 1.6 price to book. It's a bit higher than what I'm currently seeing, so it's weird in a way. But all the others number are really low. Like enterprise value to revenue is 1.28, and then enterprise value to EBITDA 2.58. I mean, all of these numbers are very low apart from price to book, but it's still reasonable considering they are profitable. Then when you see the income statement, it's pretty alright. I mean, like, income of 43 million is not like outstanding, but it's still pretty good out of 330 million and the current price of oil. They have quite a lot of debt that you cannot deny, and the cash is pretty good, 260 million, but it's still like around something like 400 million debt out of the 330 million market cap. Yeah, that's still quite a bit, like 320 they say here percent. So leverage free cash flow is really good, 80 million, like out of 330 million. That's a very leveraged company. I mean, as simple as that. But because the cost of production is low, I'm less concerned than if it was much higher. And then the other important fact is the insider is 31%. This is really high. Institution 35, so you basically have only 30% of just normal little like retail guys. And I like to see institution interested too. And then the dividend as well, I haven't noticed they actually give dividend, so around 7%, so which is really good. So in here we have the balance sheet of 2024, and you can see, I mean, like, the liabilities are massive compared to equity. This is very big leverage bet, I can't deny it. So this is the risk. Can they repay their debt? Seems like I think they could, but I still think it's a lot of debt to repay. Then we have the total debt, so at least they've been consistent. They haven't really increased the debt over the years, so they even reduced a little bit. And then the cash increased and total equity increase. I mean, this is a good sign, to be honest. Like, I like to see that. It's not even that bad, even though they have a lot of debt. It's looking good. The assets and liabilities, so they've been pretty consistent on their debt, which is huge. but the equity part is what I like to see, like this, especially on the down years like 2024 and 5. It hasn't been great. 2023 as well. 2020 I think is 2 to 4 hasn't been as great as 2021, but they have increased their equity, which I like to see. Then the current asset to liabilities, they're actually doing all right. I mean, they're not great because it should be 2 times the current liabilities, but at least their current asset is always higher. That's a start. So yeah, as you can see with the revenues here, it's pretty clear. So I forgot, but the peak was 2022, and yeah, since then it's been reducing, but this is normal. It's the price of oil that has impacting, but I'm still very surprised on how they can stay pretty profitable at the moment, considering the downside with oil. So I like to see that, to be honest. Then we have free cash flow. It's not even reducing, like, it's actually increasing. This is good to see. It means they might be actually growing quite fast. The expenditure is growing a bit too, but yeah, I mean, it doesn't look too bad. I mean, still 200 million for 200. Yeah, so it's kind of yeah, I would say not that great. Then we have the earnings per share. So this is all right, peak in 2022. But then honestly, like, I'm still surprised they're still that high at $60 a barrel for oil. Then the share issued, it seems to be reduced a bit and pick it up, but yeah, more or less the same, which I like to see, because usually when they want to expand, they tend to actually dilute a lot, so they don't here, which is good. So now let's look at technical analysis. And like, as you can see, since 2008, sorry, this hasn't done anything. Like, that started at 10 or 9, or sorry, 8, and then it ended up at 8. So like nothing. But all you can see in this is that from all these, like 2020, like a massive drop, and we are in the downside, like monthly. I mean, it's pretty clear. So we don't need to be in a rush to buy quickly, because like it's still on downside. It could change. We have a nice green candle for the last month, but like, it's still, I wouldn't rush it. On the daily, we have the same. I mean, we've seen, like, if you see here, all of this is fairly bearish. Like here, boom, I'm just showing you guys, but it's pretty much like another downside here, clearly. And then, so I would call that a pivot, the pivot part, where I'm like, I would say this is a first good sign. So it broke here, but I don't like, because there's like potential, I mean, liquidity here. I'm really, like, it could still happen and it drops back to 5.5 and come back. So it's still uncertain, but fundamental look amazing, to be honest, and they look pretty good. The technical, not so much, but it's nice to see a little break with like a nice push here. So I like that. I just don't like that they could potentially come back to this point. So like 5.5 again, because like it doesn't look like a proper break. I mean, it's experience talking, but this is what I'm seeing. But you know, if it comes back around 7, still think price is all right. At the moment, it's just a bit extended with the acquisition, like talking that pushed the price higher, that someone would acquire it. I'm not sure, but yeah, like at the moment, it's a bit extended because it didn't happen. I think it might come back to 7. And then see if it comes back to 5.5. Obviously, at this price is very cheap. But yeah, let's see how it goes. In terms of the catalyst for so in oil for the company, like, we're still in downtrend, but like, as I want to show you, there were a first sign here, and it didn't really break on the downside here, so it might be uncertain, but I wouldn't say we are on uptrend anyway yet. I really want another nice candle to push here with a body at least before I'm change my mind. So right now I'm still very I would say still bearish, bit more neutral than before, but still bearish. And I want the 80 level to break properly and then pull back for last, like, proper, like, buy setup. So it's still early. That's why the stock is actually reflecting the oil price, which is good. And yeah, I would want the oil price to rise and the stock to follow, to then have higher chance, but obviously you will not get as much discount if you do that. So it's the balance, but I'm just telling you what I see as a chart, and then you can do your own research and risk and decide what you want to do with that. So now let's talk about a quick conclusion. So overall, I would say the reserve they have is quite good. I like the fact that they have all the numbers very clearly, because there are some companies that it's really hard to find. This one, it was pretty obvious. I didn't take that long to find them. This to me is a good sign from experience. Then I would say the high insider ownership of 30%. I mean, anything above like 10 to 20 is good. 30 plus is amazing. And then we have very leveraged company, which I would say is an advantage in this case, because it could benefit if price of oil rise substantially. That's my way, my looking. That's why I'm looking at mainly oil and gas company, because I believe it could potentially go much higher. So yeah, and next bit is the stock technical analysis. So short term, I think it looks all right. I don't really like the low, because they didn't really create the nice pattern I usually want to see, but still is a bit like on uptrend short term. And then the low unit cost, 16 cost of production, to me sounds really low, which is good. And the fact that as well they don't have ADR and stuff like that. It's like the stock that you can buy from what I've seen. And then the risk, I would say high debt. You cannot deny that if something goes wrong, the debt could be impacted, but because of their low cost of production, I'm a bit less concerned in this case. Then they have the catalyst, so price of oil is still going down, so that's the thing that cannot make me too excited, but still I have an interest in that company. I think there's something interesting about it, so I might actually be building a position or not. I can't tell for sure, but it looked like it. And then stock, like the long term is still on downtrend on monthly, so it is kind of uptrend on daily, but downtrend on monthly. So to me overall it's a bit still concerning. Like I can't be too excited, but I think it's interesting. Overall I quite like. I didn't expect it there would be great assets like these, like good numbers, still positive on the low oil price. That's pretty good overall. So I hope you enjoyed the video, and see you in the next video.